Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news Hong Kong's unique free status hangs in the balance today. But first up, the OECD sees nothing but red ahead. It said the world's major economies will see their debt to GDP ratio rise to near 140% and will add $17 trillion in new debt to their public obligations as sharply declining tax revenues come when emergency borrowing zooms higher. 3 weekend events illustrate the trouble. Hertz declared bankruptcy, and freight forwarder Kuehne + Nagel said it will cut more than 20,000 jobs. And then there was a uniquely American coronavirus response: mass firings via Zoom by Weight Watchers. Today's focus is shifting to Hong Kong, where Beijing is cracking down with a new security law that will likely draw an American response by revoking the territory's special status under US law, a move that will have far-reaching trade and investment implications. The Hong Kong stock market closed 5.6% lower on Friday on the news. Shanghai took an almost 2% tumble too. And as expected, China said it isn't setting a GDP growth target this year, but it is rolling out more huge stimulus support. An extra $650 billion will be delivered to local governments with specific instructions that the funds be spent on bolstering employment, upholding basic living standards and supporting private companies through reductions in rental costs and subsidies for consumption. It will also cut taxes and fees by $800 billion. Local governments will raise vast amounts of new debt. They've already raised $325 billion of pandemic-related bonds. Now they're being told to raise another $1.2 trillion in special purpose bonds, a level almost double what they raised all of last year. In Japan, they have rolled out a new $1 trillion plan to bolster struggling businesses there. Commercial banks are set to receive a credit guarantee of up to 100% on zero interest, zero security loans to small and medium-sized businesses hit by the pandemic. In a move that took markets by surprise, the Reserve Bank of India cut its benchmark repo rate by 40 basis points to 4%, the second cut this year. India is battling a huge surge in unemployment arising from the pandemic. More than 120 million workers, most of them small traders and daily wage earners, lost their jobs in April alone as economic activity all but ceased after the nationwide lockdown there. US Treasury 10-year yield will open to the week at 0.66% and probably hold this level till Wednesday when Wall Street returns from its Memorial Day holiday weekend. The gold price is little changed to start the week, down just $2 to $1,733 an ounce. And oil prices are soft today, but only marginally. The US crude price is now just over $33 a barrel, and the international oil price is just over $35 a barrel. And the Kiwi dollar is a little firmer, rising slightly to 61.1 US cents this morning. On the cross rates, we're holding at 93.5 Australian cents. Against the euro, we're also holding at 56 euro cents. That means our trade-weighted index is now at 67.1, and that's up 2.2% for the week. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.